Hello, everyone. Welcome to OAWA's weekly bite on the most important news impacting our financial markets. Number one, inflation. In India, the CPI once again has started to go up. After trying to come down till about December 2022, the Jan 23 data on CPI was 6.52. This rise in the 6.52 is primarily because of the jump in the cereal inflation. Cereal inflation is little over 16%, going up from around 13% last month. This data is to be watched. Once again, it brings back question mark whether RBI MPC will able to pause next time around. The second update is about this mega issuance of 25,000 crore, which is round the corner from HDFC. HDFC Limited is merging into HDFC Bank. It's going to create a behemoth. The company is looking to raise around 25,000 crore of bond issuance shortly. This is going to be the largest ever bond issuance. The rumor is that they are possibly going to face limited number of resource raising once they become a bank. Hence, they are looking to stock up their capital before they turn into a bank. The third report that we wanted to give an update is about the findings from Merciless. Merciless has found out, after doing a study of the BSE 500 companies over the last 16-year period, they found out that approximately 40% of the corporates actually drop off from the index over a 10-year period. And the reason why they drop off is primarily because of accounting norm flouting. And they primarily identify 4 different reasons why companies drop off. Number one, it could be because of an income reason. It could be because of balance sheet. Third, it could be because of cash theft. Or fourth, because of an auditor's check. These 4 reasons could be one of the primary factors why approximately 40% of the companies actually drop off the BSE 500 over a 10-year period. So they go ahead and say that in case you are looking to track the index, it's important to identify those performing and healthy and hygienic companies over the remaining. And finally, on the global front, Federal Reserve is possibly going to be at crossroads. Inflation still continues to be at 6.4 in US, but the labor market remains tight. The unemployment rate is approximately almost like a 5-decade low of around 3.5%. The employment generation is also happening faster. It was expected to grow at 2%, but actually it came out to 3%. So the labor market's being tight. Inflation is steady, holding on steady at close to around 6.4%. So our Federal Reserve is going to find it difficult about what their next rate action could be. On that note, signing off for this week. We will come back with more updates next week. Till then, take care of yourself and do subscribe us and follow us. All the very best.